Hi everyone, welcome back. This is our second session of the day. Hope you all got a chance to take a break after our last session, which was superb. So I'm very excited for this session, and this one will be doing something a little bit different. So this session will be moderated by fellow iSpirit volunteer Meghana Reddyreddy. She will introduce the speaker and take it from here. So over to you, Meghana.
Thanks, Arvind. Arvind, I'm very glad to have you here at this session with us. Let me introduce you to our audience. You are the group head of retail lending at HDFC Bank. It includes personal loans, business loans, home loans, auto loans, loans against property, securities, gold, microfinance, and the retail working capital portfolio. And from your colleagues, you are known to challenge the norm within the industry and within the bank. I'd love to hear from you about the 10-second loan and the formal sanction of working capital loans in 3 hours later today. I've experienced your proud Punjabi identity, and we hear that you're a committed and passionate banker. So I welcome, and I'm very glad to host you at our Sahamati Account Aggregator Hackathon. Let me start you off by asking you, what are your thoughts on the digital lending landscape right now?
Yeah, thanks, Meghna. Thanks for inviting me over. I think let me begin by quickly reflecting on being a proud Indian in the landscape you're asking me to comment on. I think, first of all, quickly summarizing some of the stuff which I think a lot of us know. I'm just building on a case for stuff to look even better from here on. So let's look at India's public digital infrastructure, which I think probably is one of the best in the world, probably ahead of many of the developing countries. And I'm obviously talking about the 1.3 billion Aadhaar, which is generated. You have a 95% of one of the largest democracies and population of the world is covered under Aadhaar. So it covers your eKYC, it covers your e-sign, it covers your digital locker. Obviously, it eliminates your physical verification. It lays the foundation for digital signed document with Aadhaar. It lays the foundation for store and share official documents. I think these are the fundamental tenets. Added to that, if I have to reflect, look at the public infrastructure. It's being very strongly complemented by innovation by the private technology providers. Okay, you can call them fintechs on various sides, lending, non-lending, and I'll cover some of them. I think you've done a fantastic job, at least what I can see from outside. And it's across E2E lending value chain. Because, when you talk about digital lending, it has to cover customer sourcing, it has to cover your digital marketing initiatives, it has to cover your lead aggregation, it's got to cover, right from sourcing, application, underwriting, and servicing and collection. So if you want to really cover the supply chain, because that's the only way you can give a service to a customer without a drop on the floor. What I mean is absolutely seamless and do it yourself. So it's easier said than done. We did something in HDFC Bank on the 10 seconds 4 years ago. We ventured into it as a scheduled bank. And we realized that if you keep the customer at the center, you just cannot have a drop on the floor. You've got to make it easiest, and even more easy. And with, obviously, because it's a finance business, you don't want to compromise risks. So coming back to this, so I think if you look at a whole lot of fintechs, whether the lead aggregator, bank bazaars, or you're talking about Perfios in the financial data space, you're talking about customer sourcing, Paytex, you're talking about the collections, there's Wimos and there's Lotus Pays, and there is, you're talking about GST information providers, you're talking about the complete journey platforms, the verification platforms. So you're talking about a whole lot of these private players who are really adding immense value for banks today and the government data to be accessed with customers' buying. At this junction, I'd like to pause and add one. I think one of the biggest, probably game changers or new stream of innovation, you may call it. I think from here on will be the account aggregation initiative. And I think this will unlock the next wave. So it's basically enabling consented sharing of information across institutions. So whether it's financial information, providers like banks, mutual fund, insurance providers, GST platforms, or you could be talking about financial information users. You have credit, personalized finance management, wealth advisories, and a whole lot of automated systems that can access this information. And you could actually move seamlessly on end-to-end journey. I think the next point is also important to remember this, Charan, that this digital is not just about reducing cost and customer delight. I think it's a huge enabler if we really carefully see for a country our size, where 60-70% of the people are semi-urban and deep rural, mind you, because if you look at your villages, there's 6 lakh odd villages which you're talking. If you look at your road construction over the last 6 years, from 50 odd percent of the roads, you've gone to 91% connectivity. But just road connectivity will not be enough. You'll have to digitally connect these villages to the mainstream urban facilities. And that's how the boom will happen, right? So if I were to probably connect the dots there, so I think the biggest advantage of digital is you're enabling greater access to the underserved and dramatic reduction in the cost servicing. And that I think goes hand in hand when you look at players trying to reach out to geographies. Another important thing, which is probably an obvious one, but at this junction, I just want to probably spend a minute on it, is whenever a fintech, or for that matter, any bank wants to set up a digital journey end to end, I think it's important that you ask yourself a couple of questions. And these questions could be which customers you want to market to in this country, which segment it is. Is it going to be the unsecured? Is it going to be the SME? Is it going to be the LAP segment, microfinance? Are you going to be, which channels you're going to look at? How much should you lend? Because at the end of the day, digital alone is not good enough. The landscape must recognize the need for abilities for prudent financial lending norms, which I think we must realize that digital is a means to an end. It makes the means, do it yourself. It has brilliant facilities of encouraging the customer to kind of have the freedom to take a call end to end and make it so easy for him at his convenient time. But equally important, it's important to understand that you're creating a system where you need to understand, how do I verify the customer data? What is the digital risk management you're going to create? What are the digital proxies for documents like OSVs? How do I do the KYCs digitally? How can I identify the risk? How do I manage the collections digitally? And mind you, even banks today, almost, if you look at the 30-day collections, there's a 90%, 95% happening digitally today. So from all sides, I think we'll have to plug in every piece by piece and try and make it seamless, try and build on scales. Having said that, I also mentioned to you that how private data aggregators in India, at least, I can say, are creating data stores that are driving better machine-driven decisions. So whether it's the telecom sector, you're talking about bill-related data. So there are private players who actually aggregate and help you provide this. You've got a telecom score on a utility bills. You could have your various electricity, gas bills, a DTH. There are agencies who kind of authorize, you can plug onto it. There's SMS-based data. You've got a publicly available government data on GST filing. You're talking about, the Google adding value to the whole piece, aggregate affluence data. So there's a whole lot of stuff happening there. On another side, which probably might be worth mentioning, is how rapidly your B2B and B2C online platforms are developing. And so basically, I'm talking about, probably to add just a few lines to it to give you a sense of what I mean. Whether it's your supply chain financing, whether you're talking about B2B retail, or you're talking about B2C like an Amazon. So similarly, you have an Amazon business. You've got an Udaan. On a supply chain side, you could be looking at a raw material actually getting auctioned online. Now imagine with the new government agri policy, where they're allowing you to auction the farmers directly to anywhere, which was earlier only through Arthiyas. and you create these online platforms, online auction platforms, the whole digitization could change the game of a country like ours, which is very large on agri. Even on the people kind of jobs in an unorganized sector, there are very large numbers on the agri side. So I think it'll get more organized with better players moving in. You're also talking about manufacturing and ancillary suppliers. Imagine they auctioning online. So the B2B digital is actually as big and growing and adding immense value in the supply chain to the B2C. So I think when you're talking about 2000, anything which is a 2 billion today, going up to a 60 billion as per reports in 2025, which is say 5 years from now, imagine a 2 billion going to a 60 billion on the B2B and B2C space. I think so. We are probably at the cusp of a pretty sizable growth trajectory for this country on the digital platforms. Over to you, Meghna. If I've kind of given you a quick sense on covering most items, I think might hold relevance to build the foundation of your program.
I think I was smiling at various points at which you expressed an ambition to A, acknowledge the sizes of these opportunities, and B, have a mental model about how you're going to go after these opportunities. So, and one way I want to ask you that question, but resonant with our audience is if you were a lending startup today, having all this and the wisdom and the knowledge that you have, which segment and which product would you go after?
Oh, very specific question. Yeah.
Or you can do a portfolio if you like.
Yeah. I think I'm inspired by your IndiaStack's founding principle, if I can quote. They said that presence-less, that is capable of being authenticated, any business which I can do with presence-less, paperless, cashless, and consent-based. I think these four items, which is your foundation for IndiaStack's, I think it nothing else sums up better than this of the product and business that I would do. I think right now, presently in this country, looking at the law, I think unsecured loans probably most fintechs realize have a lot of play. Only thing probably in my limited view I'll advise is that it's important to also run these businesses with careful eye on the risk side, because digital, if you run with absolutely no eye on the risk side, it'll run seamlessly with great delight, but probably the company needs to also survive for a longer time. So you'll have to, in finance business, we can never forget the fact that digital doesn't do away with risks. It helps you build scale, but it has to be done wisely and sensibly. And working capital, I think working capital to my mind is a very big opportunity on the digital side. So, whether you're offering a lending journey deeply integrated with the non-lending journey on the partner platforms, that itself, a lot of partner platforms actually, you can have links where you can connect and have an app form and actually start linking up stuff. And that's a whole area, I think, on the creative side, I think all of us need to probably put our head together and work on. But it could be an interesting connecting the dots for the SME side. Yeah.
And Arvind, if I now put you back in the HDFC seat, clearly the banks have the lowest cost of capital right now in the markets, but they are not necessarily the ones with the closest access to the customers who want access to these unsecured loans or these working capital loans. And the path to that is partners.
Yeah.
And therefore, what is your advice for members of our audience and who seek to be these partners? How do they best engage with banks, large banks like yourselves, which are formidable in their cost of capital in the market?
Yeah, I think while I understand from where you're coming, and I understand the challenges that new NBFCs face in terms of raising the money on the bank side, I think it's equally important to understand the banker's mindset. And when they're lending, they're predominantly looking at the fact that people whom they're lending to understand risk management, understand the fact that they're not doing just high yield loans for shorter tenors, because theoretically you make money on it. I think they're fundamentally looking at that you guys have a platform which at least has a 1.5 year, 2 year tenor, and it's a term loan where you're kind of looking at building profiles which are manageable in your risk parameters. And I think that's something which you have to keep at the back of your mind. And of course, the rest of the challenges which the industry is facing right now, and probably accentuated by this corona issue, is something I think we all in different shades are facing right now.
Arvind, can you tell us a little bit about the journey? I know you spoke about it a little bit, but what set you out to solve for your customers with that 10-second proposition?
Yeah. I think whether it was the 10 seconds Meghna or later, we at HDFC Bank, we kind of developed a digital mutual fund which used to take 7 days. We did it in 3 minutes. And we today have 76% to 80% of that online. And I think all these products fundamentally had one concept, and that is I want the customer to decide when he wants to do. So if you use the physical channel, without a doubt, it adds value. But physical channel also needs you to visit at a decent time to the customer. And a decent time somehow overlaps with his busy schedule, right? So he's at, obviously, you go on a 9 to 6 or 9 to 7, and the rest he's with family or traveling, or in the morning he's getting ready. So it's he or she is extremely tied up. So if you create this environment, we realize that almost 50% of the people who are applying were between 5 in the morning to 9 in the morning. So which is not the really core banking timings, right? And a couple of them used to apply for midnights when they're sitting on their own. So I think when you create environments where customer can do it at his convenient time and do it yourself, and it's idiot proof, I think there are adequate security measures today that can enable customer privacy, and in that he can very sensibly build on these businesses on a rapid scale. Another learning which we got out of this do-it-yourself concept is a lot of customers build a lot of credibility around when they do it themselves. So effectively, it's more like Amazon Prime. If you give convenience, you could theoretically even price for it, conceptually. So a lot of fintechs who are pricing for them, if they're actually pricing for the kind of business they do, I think if you create a massive convenience, I'm sure there's enough segments in this country who are ready to pay for convenience.
And Arvind, can you extend that a little bit? You also do your priority sector portfolio.
Yeah.
Can you talk about how what have you learned about the experience that target sector, customer segment needs to be able to really thrive and have access to credit the way that, we may imagine?
So I think I also run the bottom of the pyramid microfinance business. And, whether it's collections, and microfinance business fundamentally has a whole lot of hiring people that go to villages because it's not easy. There's a whole literacy program associated with it. There's a social responsibility with it. But you've got to physically visit villages. You've got to collect it. There's a lot of distances to be covered. I think digital is transforming the game there, because I think we are not only adding digital to the sourcing bit. Right now, it's in the assisted mode. So it's not end-to-end digital, because the literacy level in the villages is such that it's safer and more sensible right now that we have both the operations running digital as well as in-person conversations, so that you're talking about a whole lot of illiterate ladies taking financing, where as a socially responsible bank we would want to engage in a manner. So right now cost is not the only criteria. We also have to keep in mind the country at large. So, but digital as a means of the sourcing is adding immense value. It's also adding value on the collection side, because you can seamlessly collect the money. The guy may not have to at some point of time come to the branch and deposit, which could be 50 kilometers away or say 100 kilometers away, and the risk of carrying the money for the group. So I think it is transforming quite a bit. Even on the agri side, we've seen a couple of steps where the assisted digital model is adding a lot of value. And I don't think we should undermine in whether it's the agri, microfinance, or the regular businesses. Even an assisted model will survive in this country for probably more than half a decade before it gets fully digital on a couple of businesses. Because I think assisted models, from physical to assisted models, there's a huge convenience factor and the delight factor might kick in. The cost factor might kick in as you get fully digital. Because digital is not going to take away your sales. Sales will still continue of the factors of convincing customers to take loans, convincing them of taking it from which partner. Those competing forces are not going to go away. I think what digital will do is more transparency, better governance standards, cost of funds, and I think a much larger reach at a cost-effective terms for a country our size.
Can you talk about the auto adjudication of loan processing, the auto decisioning, from a process of what kind of change was needed in the way that you decisioned on loans and underwrote those loans?
How did we go about it? You want to get a sense on that?
Yes.
Okay, fair enough. I think, initially it used to be unsecured, used to be completely a hard copy of an agreement, an application form. Everything was, there used to be a wet signature. So right from filling, customer used to fill an agreement. So the minute you had to physically fill, I needed a guy to visit the customer either at home or office. So then when we moved it to end-to-end digital, the whole journey started from sourcing, application, verification, the whole underwriting. If you look at this, the entire servicing. Of course, collections, we still are not completely digital. Like I said, the first 30 days is almost 90% digital. But the rest of the pieces had to be completely digitized. So kind of we took a legal opinion on the agreement. We realized we could make an e-agreement. We started using for existing customers where we had through analytics a lot of information on the customer. So the entire, you're well aware that HDFC Bank has a huge liability base, and there are a whole lot of credit card transactions. There's a whole lot of debit card transactions. There's an account similar to your account aggregation concept for an open market. As a bank, we have a lot of know-how through analytics on how the customer behavior and pattern is, what his delinquency trends are. And of course, we've got couple of, with time, we developed couple of proprietary models on the bureaus as well. Because even if you see the bureaus gives you almost 2 years information. It depends on how you want to curate it, how you want to cure it, and actually make sense out of it. So I think we have a couple of models there where we are able to get a sense on this entire aggregation of information and how for an existing customer it could be done end to end at few clicks. So I think 3 clicks and the guy gets the money in 10 seconds. It is a big challenge on the risk side, I must confess. When we started 4 years ago, the bank has very high risk standards. We couldn't afford to take any risk, either a process risk or for that matter a customer risk. So we had to be very careful initially. So there was a fair amount of checks done when we launched. And I still remember when we started, I was expecting some 250, 300 loans in a month as a testing. And I got a call at some 6:37 in the morning that we've already done some 80 loans. And then we were running some 3 loans a minute. So I remember the whole journey on how we kind of, so I mean, a lot of fintechs probably have experienced this in their journey as to if you have a smart process and how this whole thing migrates. So I think for a scheduled bank to probably have a fintech's mindset probably is the need of the hour. For doesn't matter your size, I think everybody will have to get smart.
Very interesting. Sorry, Meghana, I'd like to just jump in here for a question.
Yeah.
Really interesting point, Arvind, about minimizing process risk, and you were able to do so while delivering this amazing customer experience and for 10-second loan. So given that that's possible, where do you think infrastructure like the account aggregator fits in? Is it improving the customer experience, improving the process risk and the data quality? What in your opinion is the value add of this kind of infrastructure and this piece of IndiaStack?
I think it's going to change the game for the open market customer, where the visibility of the customer at a drop of a hat is still pretty limited. So you could as well, so the whole ecosystem, like I said, that you could actually have partners, and the whole digital marketing will probably go through a paradigm shift in the way you speak to customers, because with all these GST informations, income tax informations, and a whole lot of these private technology providers which are taking permission from the government and actually aggregating this information, once this whole piece gets seamlessly accessed at a price, I think with the consent of the customer's life is going to become extremely easy. With the bureaus over the last 10, 12 years, it's been transformative in terms of quality of delinquency, which you see even in products like unsecured. 10, 15 years ago, the delinquency used to be different. So similarly, I think account aggregation is going to be a paradigm shift. For what we've done for 10 seconds for existing customers, is probably account aggregation will do for India.
Okay, wow. That's really exciting. How far do you think, we have as a country to go? I mean, we always hear the statistic about, debt to GDP here being so low in comparison to other developed economies. How much do you think, what do you think is a healthy level of credit? And where would you sort of like to see the needle shift to?
See, if you cut the data and you look at a couple of reports, India's retail lending is close to 17% debt to GDP right now. Okay, so, and if you look at SME, which I think most articles talk about, that's even lower, around 12, 13%. And if you really go back to shop kirana stores, most of them still borrow from friends and families. So I think, and if you look at the developed world, like a Singapore, Australia, and a whole lot of US and others, they're all at 75, 85%. So the upside of this country in terms of people who probably a younger population getting jobs and migrating to regular loans and consumer loans is, I think, a huge opportunity. Huge could be an understatement. And unorganized sector moving into organized, coming to regular finances itself is a great opportunity. So I think the money lenders is pretty dominant right now still in the deep rural geography. Like I mentioned to you, 6 lakh villages. So similarly, I think in the entire country, the penetration levels are extremely low, and it's a one-way up in my view. That's what the data shows, and that's what the developing world has also shown similar patterns.
Okay. And would it be fair to say that, in addition to increasing the amount of debt, and, debt in this case would be a good thing because it helps people be more productive and would drive the GDP number itself also up, as well as, of course, providing some modicum of financial support and stability and investment to different industries. Would it be fair to say that we can expect more personalization also of products as the account aggregator kind of ships out?
See, I think this whole analytics clubbed with machine learning and artificial intelligence. Okay, this artificial intelligence, I think, is going to unlock a big value from here on the technology side. And predominantly, it's the whole simplistically, it's able to recognize much better clusters. It is able to recognize much better patterns, both on demographics, customer profiles, using data, not just the regular banking data, but even the social interactions, the social website access of the customers, their shopping data on different platforms with their consent. So I think the whole keeping the data privacy in mind, but at least the customer will be the king with the ease of so if it's a legitimately sensible customer, the whole picture will be right clear there, and I think everybody probably will be able to finance him much quicker, faster, and much easier at different touch points. Imagine he's in a mall and he really needs his funds there, or to probably a POS machine where he is. You're almost probably with the POS machine, you can virtually do the funding right away right now. So I think the more players in this game, and with your account aggregator put together, it'll become so much easier to facilitate that environment of digital lending at a click for the customer on the go. So you could be having a customer anywhere traveling, and he won't probably, basis his credit history, basis his past repayments, and he could virtually be able to choose the option he likes and the product range that he wants. Whether it's an overdraft, whether he wants a short-term tenor loan, long-term tenor, it would just be a few clicks away for him.
Very fascinating. So we have a question from Mr. Vishwanath Kuppa from BillDesk. He says, hi Arvind, firstly, it's always a pleasure to hear you and witness the fervor with which you speak. My question to you is, in the rural markets where digital footprint is extremely low, how do you foresee digitization in unsecured lending?
I think unsecured in villages probably gets closer to microfinance. But I think, like I said, out of the 6 lakh villages, most bankers and financiers are looking at the 80,000, which do bulk of the business right now. I also made another statement that 51% of the road development, infrastructure development in the last 6 years has gone to a 90 odd percent. Now that's important to see what the government is doing at the ground level, because this all will facilitate the entire supply chain of an economy to move around in these places. And as we integrate this, I don't think most players have a choice but to use the digital platforms to get to these customers. Also, coupled with this, if you look at the government's recent agri policy of allowing farmers to directly access the sale without even the Arthya as an option, I think opens up a plethora of opportunities I can't even right now quantify. On the various secondary supply chains and the various big players that's going to probably enter these various villages due to the agri support that they see a future promise for, and create secondary line of supply chain. So I think India is a cusp of a lot of infrastructure and decisions, building the foundation, building the physical infrastructure, and added to that, I think, your digital infrastructure.
Interesting. We have another question from Mr. Kiran Samudrala from Equifax, and he asks, "What is your take on cash flow lending? Are we close to having infrastructure where lenders and borrowers transact at a single point? How should the risk be looked at where loans are given against assets in these turbulent times?" And may I even ask you, what do you feel is the definition of cash flow lending? Because I've heard a few different terms. Would love to get your idea of what you believe that term means.
No, I think I don't know what he means. Cash flow lending, in very simple terms, and I'll probably cover 2-3, is everybody understands that when you fund SMEs, especially if you're funding a business, you need to know what his cash flows are. And so account aggregation, the biggest advantage is your cash flow from all possible sides, it gets verified. It covers even your angle of risk. Like today, in simplistic terms, you've got companies like Perfios and all, and a couple of these international companies who are doing your account scraping, right? You have your bank statement and a whole lot of cash flows which come out of that. Unless he's talking about the buyer and supplier platforms and then, kind of meeting in a P2P lending. I'm not too sure if that question pertains to that. That's another form of measuring cash flows and creating those platforms. Like in China, you've got a very big P2B market.
Yeah.
And, all these, by the way, account aggregation will also add value to those platforms where they can borrow from each other. Because you'll have much more transparency and information flow. So even people who are not specialized in risk management probably will be able to take much better part on the cash flow assessments.
In a very topical addition to this point is the launch of Upi Auto Pay, which will herald in a new kind of era of collections, I believe, because it'll be possible to issue these e-liens, which basically dictate that any incoming monies must be, X percentage must be diverted to the lender. So you can actually secure the loan against the future cash flows of the borrower. I think that will also be very interesting in this whole.
It would be, yeah, I guess so. I think if these systems really come out the way we are hearing them, and this gets probably get a backing of the regulator, I think you will have a very robust economic system to probably give customer the options.
So I don't see any further questions, but I'd like to just say one thing, which is that for us to achieve as a nation progress and this healthy limit of debt to GDP and increase the productivity and the financial health of our citizens. We need whole of society effort, and that means that it's not just the large players like HDFC Bank. It's also small startups who'll come and innovate. And for those small startups, for those challengers, and for people who wish to contribute to this journey, I think it's really important the learnings that you've shared. So thank you for the knowledge that you've shared with all of us today, and I really, really enjoyed it. And Meghna, thank you for moderating it. So I think the audience is also great with their questions. So thank you very much, Arvind. Really appreciate it.
Thanks, Arvind. Thanks, Meghna. Thanks for having me over.
Thanks, Arvind. I think one thing I do want to say is, as we've been working with early adopters of the account aggregator over the last year and a half, especially the banks, I think it's been very powerful to have leaders who are leading within these banks, who are showing the conviction and therefore leading the ecosystem. So I'm actually quite happy to see you represent that mindset in the banking industry in our session here and at the hackathon.
Yeah, we are learning from fintechs. I think they are really a solid backbone of the country, and I think India is got a. By the way, proud after US, I believe India has got the highest number of fintechs. So that's a great backbone for the country. And I think even large banks, like I said, we'll have to keep learning. A lot of these young guys have brilliant ideas. They've been able to even execute it. It's a great encouraging signs for the economy at large.
So here's to more interactions between banks and the fintechs.
Yeah. Thank you so
Thanks.
Thank you, everybody. All right. So just the last piece of housekeeping, sorry for our audience. Tomorrow we begin at 4 p.m. We have a session about the sizing of the account aggregator market. And then at 5 p.m. we're in conversation with Kunal Shah of Cred and Sumit Gwalani of Epify. So please do tune in for that. And recordings of this session will also be available on YouTube. So one last time, a very warm virtual applause for our speaker, please. Thank you very much, Arvind, and thank you. Bye-bye, everybody. Thank you.
Bye-bye.